IBM earnings are out. Let me get you those numbers. The results are a beat on the top and bottom lines. You see the stock moving lower. I'll tell you why that might be in just a moment. Guidance raised for Q4 in effect because the full year is raised. So there's an asterisk on the beat. Get to that in a moment. But revenue beat at $16.33 billion versus $16.09 consensus. The upside, though, did not come from software overall. Software at $7.21 billion, in line with consensus. Consulting, though, did beat at $5.32 billion versus $5.24 expected. Infrastructure in this mainframe cycle is up 15% in constant currency, which also accounts for a big amount of the beat. Now, for the full year, constant currency revenue growth of more than 5% now is what IBM is guiding to, up from at least 5% from the last release. A free cash flow for the full year at $14 billion, up from $13.5. Now, I did speak with IBM CEO Arvind Krishna about the quarter just a little bit ago. The reason why software was just in line was Red Hat. It was up less than expected, while other AI-related business did better than expected. Krishna did tell me the Red Hat miss is just a blip. Here's some of what he said. Red Hat did 12% instead of 14%, he told me, which it did last quarter. You don't see me worried about it because our bookings growth remains strong at 20%. We did have some weakness earlier in Q4, in 24, late 23. So by the end of this year, that all kind of washes itself out. In other words, this was a little bit of an execution issue as the sales force was figuring out how better to sell Red Hat to customers, what they wanted to see. They figured that out. This is just like a bubble moving through the system. Now, on what is strong, he mentioned HashiCorp, which is a multi-cloud, hybrid cloud type product that IBM did purchase. And I asked him about the AWS outage and how much that is feeding into the idea that customers ought to be on multiple clouds. Here's what he said about that. He said, I would look at you and tell you that Hashi is on fire. Our bookings, demand for Hashi are off the charts, significantly higher than when they were a standalone company. Now, part of it is we have a bigger reach, but part of it also, John, it's to the point you just made that people are now waking up to. In order to be resilient, you need to be on more than one infrastructure. You can see that stock now down, Morgan, about 4% here in overtime.